So what everybody sits on the edge of their chair waiting for a group of men who are unelected to determine the price of money, Bitcoin makes the game fair and easy to understand on a fixed rule set that we can all understand and agree upon.
There's no chart plotting where you're saying this is where we
Dot
think
plot.
interest rates are going to be out here in the future. It's literally charted, and you can see the hash rate and track it in real time.
Yeah, and people have different methods of calculating hash rate. There is no specific way to know this is the exact hash rate. Like it's actually a calculation.
But very close in real time fluctuation in that hash rate difficulty that is making micro adjustments to the Bitcoin economy. And that sort of keeps us in a Bitcoin business cycle as opposed to the boom bust cycles that we get through a Federal Reserve central bank.
Exactly. It mellows out those. You can't eliminate the cycle because it's natural.
Right. And there's nobody appointing who's in charge of the Fed. There's nobody, with a political influence over the Bitcoin blockchain. This algorithm is going to run regardless of who's in charge, regardless of who's participating, regardless of who's got the biggest bag.
Yeah. And Satoshi, if you go look on my highlights on my Twitter, Satoshi actually talked about this. That's where I learned it from. So it was reading Satoshi and learning from him that led to me kind of building out the understanding a little bit further to the point where I could build the BFV algorithm. But he said that the price of any commodity will trend towards its cost of production. And then when you look at the process of price discovery, like a lot of people don't understand what that even means and how it works. Because when they go to the store, there's just a price and they buy it for that price. But that price is set at the margin of the producer, right? So if the producer has to pay $2 to produce whatever they're selling to you, they cannot sell it to you for less than $2 because they're going to go out of business. So the cost of production is very important in the price discovery process. And some of the people are probably saying, well, CJ, if you dig a hole in your backyard and it costs you $100, it's not worth $100. Yeah, you're absolutely right. It's not worth $100 because there's no demand for it. But when you're talking about goods and services that there's a consistent demand for, then this law comes into play.
Right.
And what happens is this is how the free market price discovery signal works, right? Yavari wants to name the price through central bank digital currency. He wants to tell you how to allocate resources. The free market price signal works this way. If somebody comes up with a product and the cost of production of that product is, say, $50, and the consumer comes and says, man, this item costs $60. You know what? I'm not getting $60 of value. This is too expensive. I'm not going to buy it. Well, when demand goes down, the price has to come down in order to attract more demand. Well, eventually what happens is the price comes down to $50 and the producer says, man, I hope I can sell these at $50 or I'm going out of business. And when he can't sell them at $50 because the same product, the same value proposition that wasn't worth 60 is not worth 50. That is the free market signaling to you. You are wasting your time, energy, and resources. You need to reallocate and produce something that has a value proposition that allows you to charge a price above the cost of production. And that's what Bitcoin is doing right now. The difficulty adjustment pushes the cost of production towards the price. And it's going to keep doing that until the world says, well, that price is not worth the value proposition of Bitcoin. But the value proposition of Bitcoin is freedom. The value proposition of Bitcoin is truth money. The value proposition of Bitcoin is savings technology, pristine collateral. The value proposition is tremendous. The value proposition is multi-millions of dollars per coin to get the fair value of what Bitcoin network is offering you and what you can do with that asset when it gets integrated into the system. And right now, it's that cycle you talked about. Rather than the booms and busts, we go through the halving cycle, which some would call booms and busts. But ultimately, if you're a long-term Bitcoiner, you don't really care about the peaks anymore. Paul, I'm sure you don't. Yeah. It's fun when you're at the peaks, but you know what I care about? Higher lows.
Yes, higher
The
lows.
definition of store of value is higher lows. And how do we get higher lows? By the network growing in hash rate, difficulty pushing up cost of production, and producers demanding a price above the cost in order to stay profitable and stay in business. And if they can't, hash rate goes down. So as long as hash rate goes up, we're going to see that this positive feedback loop, another one of them, is going to keep pushing that price, cost of production towards price, which drives value into the network.
This cost of production is also answering the very common question that I hear in the Bitcoin space, which is what backs Bitcoin, right? I mean, it's all, that's one of the first questions when you're trying to educate somebody about Bitcoin is, but I don't understand what backs this thing.
Yeah.
So maybe you can explain that. Like as a miner with your cost of production, all the energy and input and capital outlay is really building and the algorithm in conjunction with the algorithm is building this cost of production that is really underlying the value of Bitcoin.
Yes,
that's accurate, or?
Yeah, absolutely. That is 100% accurate. But that's not to say that price can't go under the cost of production. Mm-hmm. Remember, oil traded negative for a little bit. So this is a typical commodity cycle, and all commodities will go from fair value to a premium, back to fair value to a discount, back to fair value to a premium, and that's the commodity cycle. And that's how you define price discovery. The cost of production is a baseline that you should compare the market price to. It's not saying what Bitcoin should be worth. It's saying that this is the value, this is the cost to access the value proposition of the network. Mm-hmm. And that cost will keep, just like any other producer, if they're producing something that is really valuable to the marketplace, and the marketplace keeps demanding more and demanding more, like Bitcoin, the base layer of demand growing faster than the internet, you can make more of them. But sometimes you might get to the point where now they have marginal cost of production. Typically, if you make 1 million water bottles, it might cost you $1 per water bottle. But if you make 10 million water bottles, it might only cost you 75 cents per water bottle. But if you make 100 million water bottles, it might actually cost you $1.10 per water bottle. So there's a sweet spot in the production zone to where you get to some point, the demand is so great that now you're having a hard time getting the resources to produce more of those units. So the cost increases because now you can't get them from your local quandary anymore. Now you got to import them over from Taiwan. And now you got that material coming over on ships. And what does that do? All of that process increases your cost of production. And what does that do? That pushes up the front end price so that your company can remain profitable. That's what Bitcoin is. Bitcoin's marginal cost of production is up only because of the profitability of the hash rate and miners. So this strategic design of the difficulty adjustment is actually pushing value into the network. So it's not that it's just backed by that. It's actually designed to increase in value over time based on the growth of the network. And the growth of the network is based on the demand on the network. And like I said, the demand on the network is growing faster than the internet and will continue to expand, I think, even faster as Bitcoin gets integrated. And we don't just see it as a unit of store of value, but as a medium of exchange, and then ultimately a unit of account.
Right. We're still really early.
Yeah.
And store value too. I mean,
15 years. Ask your listeners, how long did it take for gold? How long did it take to get off of seashells and yapstones? How long did it take for gold? And you know what's interesting about this, Paul? Gold could not increase its monetary velocity until it had an L2. Yes. And that L2 was paper derivatives, right? Bank deposits, their checks written against it.
Like 4,000
super
years
long.
In?
Yeah. Yeah. So we're on year 15 and Cantor Fitzgerald is already opening up a lending window. Right. We're in year 15. It's already being integrated into Wall Street strategies through MicroStrategy. We're in year 15. Next year in year 16, we're going to have Bitcoin integrated into financial products. The pace at which this is moving is unbelievable.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.